Equilibrium is one of the most important ICT concepts, so sit down, pay attention, and listen. It's that simple. So, welcome back to the new video, bro. Now that I have your attention, as I told you, today we are going to talk about equilibrium. Shit, that line was weird. Equilibrium, okay? So, basically, what equilibrium is, as you can see here, the middle point between discounted and premium price. Now, what does that mean? It actually tells us where the price is more favorable to be, like, for us to buy stocks or sell stocks. Okay, for example, when we draw equilibrium, I'm going to teach you that, how to do that. But whenever we draw an equilibrium, we can have like optimal entries for higher profit. It's that simple. So now let's go, as always, to our drawn example first, and then we go to the charts. For example, we have a downtrend. We always start with a downtrend, and now suddenly we want to change the trend. You know what that means? That means we have to sweep the liquidity and break structure. Okay, so we swept liquidity, we broke the structure. Now, what is an equilibrium? An equilibrium will then tell us where in this whole range is it for us better to buy stocks, okay? Because if you start buying stock here, it's way more expensive to buy rather than if you start to buy here. Why? Because of equilibrium, okay? So how do we draw an equilibrium? We determine equilibrium by taking the most recent low in our case and here the most recent high. And then the middle point is equilibrium. So here is equilibrium. So what will the price more often than not do? The price will then come back into the so-called discounted zone, because this is discounted zone, this is premium zone. The price will come into discounted zone. The banks will then start buying the stocks right now here in discounted zone, and then the price will continue higher and higher and higher, okay? Because as you can see, if we start, let me change the color. If we start buying stocks here at this point, it's way more cheaper rather than to buy at this point here, because then all of this is a difference between profits. So all of this is additional profit, okay? Basically, the equilibrium is, I don't know if you studied economics or not, but basically equilibrium is the typical supply and demand like chart. You know, for example, here you can see that if we have high price, we have low demand, okay? But if we have a lower price, for example here, you can see we have a high demand, okay? So it's all of that. It's literally, equilibrium is literally here as well, the middle point between those prices, and everything that is here, it's expensive, and everything that is low is cheap. The very same thing is also with equilibrium, okay? So for example, then we have a bullish trend, okay? What does that mean? Then what do we have? Let me change color again. Then we draw an equilibrium again, okay? We have here the middle point. So then the price comes into premium zone, which means expensive zone, and then continues lower and lower and lower. Why? Because if we start shorting here, we have less profit rather than if we start shorting here. All of this is our additional profit, okay? So now that we know what equilibrium is, let's go to the chart. I have here Bitcoin Cash chart opened, and now let's go together through the chart and I will show you equilibrium, okay? For example, what do we need for equilibrium? We need liquidity sweep and break of structure. So here we have liquidity sweep, okay? Good. Where do we break structure? We break structure, wait, sorry, let me zoom it. So here we have then break of structure, okay, with this candle. So since we swept liquidity, let me also draw a liquidity. Okay, so it happens to be the same. So here we sweep liquidity. okay? Then with this candle we break structure. So what do we know? We draw an equilibrium from the most recent high to the most recent low, okay? And you can see that the price perfectly came into a premium zone, which is above 0.5. So technically all of this is premium zone, okay? The price comes inside and then continues lower and lower and lower, okay? Good. What do we have? What do we have here then, for example? We have a liquidity sweep, okay? But we don't get any break of structure. So we ignore this, okay? Because we are still in a downtrend. But what happens afterwards? We have massive liquidity sweeps. Right now here you see all of this is swept. Then we have break of structure here, okay? So what do we do in that case? In that case, we draw an equilibrium to go higher, but you can see that the equilibrium does not support, like the price just goes through the equilibrium and continues lower. That's completely fine, okay? Because no strategy has 100% win rate, okay? So now that since we lost that trade, let me show you another example, what we can have. For example, here we have liquidity sweep. You see, let me zoom it a little bit. You see here we have liquidity sweep. The price sweeps liquidity. And what does happen afterwards? We break structure here. You see with this candle, we break structure. So what do we do in that case? In that case, we draw an equilibrium from the most recent low, okay, where break of structure happened, to the most recent high, where break of structure happened, which is right now here. And you can see that the price didn't touch equilibrium, but instead with this candle, take a look at this candle, it pushed higher and without touching created a new high. So what does that mean? I drag an equilibrium higher to the new high, because this is now the new high. And what happens? The price goes down, 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 sweeps equilibrium. You see here 0.5 is touched, which means discounted zone is touched, and that means we bought stocks cheaper. And then you see the price immediately reverses and continues higher and higher and higher and higher. All right, good. What else do we have? What do we have here? For example, liquidity sweep, okay, good. And then break of structure at this point. Boom, black candle caused break of structure. We take a look at all of those candles. Take a look. 1, 2, 3, 4, 5, 6, 7, 8. The highest candle, okay, the high out of those candles is the beginning of equilibrium. And then when do we have the next low? Right now here, down. So this is now the next low, okay, the most recent low. And what happens? The price comes up above 0.5. Let me show you that. Oh, sorry. Let me show you that here on the chart. Goes above 0.5. You see we have here 0.5 premium zone, which means expensive zone, and price stocks are better to start shorting here rather than down here, and the price collapses. Wow, the price collapsed. Okay, good. Then what do we have here again? I don't know if we already if we taken a look at this example, but we can do it again. So we sweep liquidity, okay, and then then the price breaks structure here. You see with this candle, okay. So we take a look at the candles. We have this low, okay. So we take the low all the way to the high that happened after the break of structure, which is now right now here, okay. And then what happens here? This is not an official high. You can see this candle is not an official high, but it's a swing high, which is upgraded high, okay. So we push the equilibrium higher, and then boom, what happens with the price? the price enters a discounted zone, okay? The stocks are cheaper to buy and then explodes higher and higher and higher, okay? We have taken a look at this example here. But you can see this happens everywhere, okay? This happens fucking everywhere. Come on, come on, come on. Show me something more. Show me weekly chart. Let's take a look at weekly chart. Liquidity sweep. Where is break of structure? Boom. Break of structure with this white candle. What do we do? From the low to the high, okay, we can take swing high. The price comes inside discounted zone, you see below 0.5 and explodes higher and higher. Oh my God, oh my God. Take a look at this. Comes into discount and boom, bam, higher. What do we have here? We have liquidity sweep, break of structure. Do we touch equilibrium? No, it's way too high. This is way too high, okay? But yeah, you can see this is it. This is the whole magic about equilibrium, okay? So at this point, I want to also invite you to click the first link in the description to join my Discord server. It's free, I'm not selling anything. You can see that we have a lot of trading content. We have a daily bias, then trading breakdowns. This was from, I'm recording this on Thursday, so this was from Thursday. Absolutely banger trade. This one also banger trade. Here I lost. Here you can post your own trades. You know, we have also self-improvement content. Why? Because our goal is to become better traders and stronger men. So if you agree with, if you like our movement, then feel free to join. And because our goal is to get rich with trading and becoming stronger men with self-improvement. So bro, feel free to join, do the hard work, and see you on top of the world.